So, and Ilonka, thanks for joining us today. I always appreciate it. And I think you're amazing and awesome. And I've known you forever, it feels like at this point. But for any of these new...
Ilonka Nobles. I've been in the securities industry since 96 and have worked with registered or sponsors who sell their products through broker-dealers, sponsors who don't, but sell their products on their own. I have a FINRA registered broker-dealer, Texas State registered RIA, crowdfunding portal intermediary, portal technology, and just kind of do all things securities related that after you've done all the legal work, I can do the consulting and carry them through the process.
Perfect. So basically, you know the ins and outs and the everythings when it comes to the securities compliance and raising capital.
Definitely know the compliance side of things very well.
And that's why we love you. So, but, we were talking quite a bit about crowdfunding portals in Regulation CF. And I know you have your own technology, and I definitely have some strong opinions on, going a direction of like a marketplace-based crowdfunding or actually doing it your own. Just to kind of set the stage, if you're doing a Regulation CF offering, you're required to use a third-party FINRA registered crowdfunding portal. And they really come in two flavors, one of which is working with kind of the start engines or the WeFunders that they're big companies and they do drive traffic. But your opportunity is sitting there in a marketplace with all the other opportunities. The cream of the crop, the very top few of them will absolutely get funded and funded fast. Everybody else is kind of just there. And one of the toughest things is they also expect for you to be doing the marketing for your deal, driving traffic to their marketplace. So it's kind of like you're wasting some of your marketing dollars driving traffic to a marketplace that people are investing somewhere else. That's where Ilonka comes in to save the day. Tell us a little bit about doing more of a white label and what that looks like and how it operates.
Well, with the white label option, the sponsor basically presents himself to the world with everything in that single package. There is a Invest Now button on his website or a special website that's designed just for the money raising part of it. This way, any of his relationships, marketing dollars can drive the traffic to that one home. It's really the difference between, you say, like a bazaar and there's booths everywhere and people get overwhelmed and they do like the interest at first, but then the next new booth pops up and they've turned their attention away from you. So you can control it and you can ensure that all your marketing dollars are going for people to take a look at just what you have to offer.
And I'm a strong proponent of it. And I think the most powerful thing you said is you can put a button on your website to kind of control the traffic where they're only looking at your opportunity. They're not getting exposed to all these other opportunities. In my opinion, that's the only way to go.
I think it's the best way. When this first started, it's always interesting when a new thing comes out and you see how it evolves. The start engine, the WeFunder, they did end up becoming like the biggest ones out there. And it can be tricky for a portal operator to really be successful, but it's still a viable, necessary thing for the small sponsors to be able to take advantage of this law that was actually created when Congress saw what was happening in the Kickstarter and the GoFundMe, where there's donation based, or you might get the first in line to get the product as it rolls off the assembly line. But those people who supported those great new things that were coming out there not get a chance to invest in the company and support the company and invest in the growth of the company. So this way, it's sponsors who get a following and develop a fan base, basically, can actually their profits with the people who invest with them.
I love it. So let me just do the awfully amazing. You are absolutely correct. But, if you are thinking about doing Regulation CF or Regulation crowdfunding offering, Ilonka's company, Nobles and Richards, they do this white labeling. They kind of work things out. She's got some great opportunities for you. There's other people out there, and not to rain on Ilonka's parade, but every client that we have, we always make multiple introductions to to different portals, different accountants, different everybody. And we always make multiple offers. So I just say that because she's awesome and a great option, but there's a lot of people out there as well. And so we also work with Ilonka and other people, and we make introductions to everybody. Ultimately, it's your decision on what makes most sense for your business. So she's awesome. There's her QR. Reach out to her. We get questions all the time about either, hey, introduce me to a broker dealer. People have this expectation that the broker dealer is like the end of the day. They'll fund everything. They'll bring all the capital in. That's all it takes, which, I know that's not the way that the world works. That's not the way that the broker-dealer industry works. If you don't mind, could you burst a few bubbles? And if somebody comes to the table and says, hey, Ilonka, I've got this $10 million funding that I'm trying to do. If I'm that person, what do you tell me of okay, if you want to pay somebody to raise capital, here's what it takes, and here's the process.
Well, there's really 3 levels that a broker dealer would be a good idea for a sponsor who wants to raise money to use. The first one would just be from a compliance and guidance aspect, as doing the paperwork, reviewing the marketing, making sure that everything's being done in a compliant manner. If you have the means to do, if you're doing a 506C, and you can generally solicit. So that would be one level of advice that I would suggest. The other is if you want to hire your own sales team that are registered and licensed, and our broker dealer can license your reps for you, and they basically just live and breathe your product, and that's all they do, and they go out and call to raise the money. The third level would be if you want to get into a syndication level where you hire a managing broker dealer to introduce you to other broker dealers, other RIAs, and other financial sources. All 3 of those go dramatically up in price, and the requirements for you as a sponsor also get broader. Once you are basically paraded around to the rest of the financial community, there's a very, very high standards and expectations of you.
What you mean by that is prior performance, success, and working with investors. And I also know that a no-go unless you have hired and have on board a wholesaler.
Right. So prior performance, that's just a starting point, because you're going to need that for investors' sake. But the expectations, third-party due diligence reports, usually multiple of them, one on the sponsor, one on the program. And then there's attendance at venues, the marketing dollars for setting up booths. But the wholesalers, it's usually a team of people who have expertise in communicating with the financial community and knowing how to provide what they need to be considered.
Very realistically, how much experience would you suggest somebody have before they even try to play that game with the general broker-dealer community?
Ideally, you want to show that you have experience in having raised money from investors and managed investor money before. Yes, there's prior performance on the project levels, but if you have never even raised money before, it wouldn't even be worth your time.
Perfect. Second question, how much? If I were to say, I really want to do this, and not a nickel and dime, I want to do it properly, what kind of budget between hiring the wholesalers, hiring you, doing the marketing? I know some of these shows are $10,000, $15,000 just to show up.
That's right.
What kind of budget do you really need to be able to be willing to risk to make a successful go at it?
To be effective and timely, because there's also a time period. In that space, you're going to need to show up consistently before people just start wanting to sign selling agreements with you. But I would say you need to be comfortable with $500,000. I mean, I can say 300,000. There are ways that you can take your time getting into the space, kind of ramp up slowly, get firms comfortable with you. And that could be spread out over a few year period. But once you go into that space, it's a large commitment. And others would say that it would be $1 million budget that you need to be prepared for. And you can add these expenses into the offerings. Mm-hmm. There are sponsors who will first raise the money to go engage in this way. So that's also an option.
And so, I've always been told, and it may have even changed by now, if you're not raising at least $30 million for a fund or for your opportunity, don't even think about it. It's not worth the time or the effort to invest that much unless you really have a big goal, and to go through the due diligence with the other larger broker dealers. They don't want to touch it unless it's a larger project. Do you have any kind of guidelines of what to do the general broker dealer, the wholesale markets? Where's kind of the starting point in terms of somebody just trying to do a fund?
I agree that anything less than 25 million you would have a hard time really getting traction, because it might be not worth a broker dealer's time and effort to go through the entire due diligence process and then find out that half the program has already been taken up or something.
And I appreciate that you brought up you can raise money to actually invest in doing this. We've got our own program, call it the Syndicate the Syndicator, and how to raise money for your own business so that you can create those investment opportunities down the road, not just paying for the broker dealer and the marketing, but things such as if you're doing ground up construction, the engineering, the architecture, some of those expenses are huge. Ultimately, you should be able to get it back from the investments, from the syndications, from the funds. It's an expense of the business, but it can be a lot of money out of pocket. So we do have strategies for you to syndicate your syndicator to help you create the capital in order to pursue those businesses. So thank you for that. Let's take it a step down. Now I go to you and say, hey, I've got a sales team. I have my investor relations team. I want to start paying them commissions. What does that look like in working with a broker dealer?
They have to pass some tests, get some licenses.
Generally, which ones?
Series 7 is a little bit more than they need. It certainly covers it. Series 22 is a direct participation program representative. And all the direct participation programs allow for the flow through of the tax consequences. There are some people out there getting a Series 82 for selling private securities, but it does not allow you to sell what we predominantly work with the sponsors.
Got it. The direct participation programs.
Yeah.
So I, in my past life, had the Series 7, and that's a massive test covering absolutely everything. And you can do anything almost within the securities industry if you have that license. Plan to spend 6 weeks studying, if you're still working or whatnot, to take the test. Not many people have ever heard of the Series 22. Can you give a little bit more information about that, as well as if somebody wants to do it, there's not even many training programs out there for it, but can you give kind of some advice to people that have their sales guys? Oh, we want you to go get licensed. We don't want you to do the whole 7 because that's a pain. What does the 22 look like?
Well, there was a time when training material companies stopped producing sales material for the 22. It has come back. It is easier to find now, but my first recommendation would be that your salespeople take their SIE, which is the Securities Industry Essentials exam. You don't have to be sponsored by a broker dealer to do it. It gets you acclimated to the securities industry, and it's the essentials. So everybody has to take that now. And then from there, you could take the state level exam. For us, it's the Series 63 in Texas. Some states don't require that, but both of those can be taken while they are still working for you before they're associated with a broker dealer. And then the Series 22, as you said, it becomes the top off exam.
So pre-planning, before they even start bothering you, make sure that you have the 63 and the SIE.
That's right.
Then the 22.
That's right. There are restrictions from people entering into the space. If there are certain criminal background issues, certain financial issues. So you really want to start with a clean background.
Clean slate.
Yes.
I remember with the Series 7, it was plan to study for 40 to 60 hours, something like that. For the 22, you have to be sponsored by a broker dealer. You can't do it yourself. Do you have a recommended timeline of as long as you study X number of hours, that's kind of the average to actually pass?
I would say it would still probably be at 4 weeks, something like that.
Okay.
Not, 40 hours a day kind of thing, but I would allocate about 4 weeks, but probably max, because if you go beyond that, then this stuff starts flipping out of your head.
I'm just impressed you found 40 hours in a day. I've been trying to do that for years.
Yeah.
But no, I appreciate it. And so, great. I can get my team license. They hang their license underneath a broker dealer such as yours, Nobles and Richards. And then now I still have to have you approve my offering too.
Oh, yeah.
What does that due diligence look like? And I know most often we're doing third-party reviews. We've got other due diligence processes. Can you kind of walk an issuer through that process of what it takes for Ilonka to sign off on, great, our sales guys can sell it?
Well, the due diligence process, like those third-party reports, are going to range anywhere from $10,000 to $30,000. If it is not going to be syndicated across to the others, we're just doing that branch style method, we can get through that for 15 and less,
Okay.
all included. And we're going to be looking at running background and credit checks on all the material principles, taking a look at financials of the company and the affiliates, looking at background of the prior activities, looking at, the closing documents, appraisals, all of the things that you prove up, basically, that you are who you say you are, your deals did what they did, you have things in place to move forward, whether it's, do you have the staff to manage investors?
Got it. And then let's take it one step even lower with just kind of the compliance. Is that actually through your broker dealer? I know you actually will do consulting for private issuers as well. If somebody wanted to just make sure that they're doing everything right, what does that really look like to engage with somebody such as you that like knows the industry inside and out? And, we get asked pretty often, do y'all do ongoing compliance? Do y'all say, and my response is always no. Attorneys were way too expensive on an hourly basis. There's better ways to do it. More check in every quarter, pop in, have the conversations once a month, every few months. Like there's better, cheaper, faster, easier ways to do it than trying to get on my schedule, which is impossible at this point. That's where you come in and, whether it's Ilonka or somebody else, kind of recommend a securities compliance consultant.
So there's two parts to that. In one way, it can still be gone through the broker dealer, is basically acting as a transfer agent, reviewing all the paperwork, making sure it's all in compliance, doing all the OFAC and AML.
OFAC?
Yes, anti-money laundering checks.
I thought you were just saying OFAC you. AML?
Anti-money laundering. Yes. OFAC is the Office of Financial Assets.
So when you're bringing in money from like offshore, it's part of the process of actually reviewing these lists to make sure your investors aren't unacceptable people to be doing business in the United States. So that's actually part of what Ilonka is talking about.
Even in their investors' paperwork, let's say they mark off that they're using a purchaser's representative, meaning that they're not using their own sophistication. Well, what does a sponsor do when an investor says, no, that's somebody else? Little things like that, making sure that the offering is going as it's supposed to. Was there an escrow put in place? Was it broken correctly? But did you break escrow according to the way you're supposed to? That can be done by the broker dealer for a percentage and minimum monthly. But if the broker dealer is not going to be involved at all, and you're going to be processing all your paperwork, I can provide ongoing compliance, whether it's a periodic checking and review, maybe coming in and doing a mock audit. What's it going to look like when the state walks into your office and wants to look at things? Because even if you're not involved with FINRA, every single state and the SEC, if you're crossing state lines, have jurisdiction over what you're doing. So you want to be prepared when something like that comes in.
It doesn't sound easy at all.
No.
I'm glad we have people like you to just take care of it for us.
You kind of geek out on it.
Oh, it's so awesome. All right. Question for you. What are you seeing in the markets and kind of what are the broker dealers looking at or considering? Like these are things that honestly, the people that are watching don't really know. They've never taken the time. They don't have the resources. They haven't gone to the road shows like you have. Give us a sense of what's going on in the real investment industry right now.
Okay, so I guess we all know that real estate has always been the darling. It's the plain vanilla workhorse of investments. But over the last year or so, things have really kind of changed. That the metrics don't work as well right now. So energy is coming back with a vengeance, oil and gas investments. And but aside from the product of, whether it's real estate, industrial warehousing is very big still. Self-storage is, all that commercial real estate, multifamily. But and there's some firms that are out there doing venture capital, doing a fund to give private equity to young startups. We've got some pre-IPO opportunities out there, getting some founder shares of companies that are in their $1 billion range. But what's more interesting are the styles of opportunities, like the 1031s of yesterday are really the Delaware structure, the DSTs of today.
Could you explain the 1031 and the DST, what that actually means?
Okay, so the 1031 exchange is when you have real estate and you have capital gains from the sale, you can take that money and put it in a like-kind investment, another real estate program. And it's kind of a one-for-one. But the Delaware Statutory Trust got determined that you can now take that same money and put it into basically a pool and be earning distributions from investments that are like kind. And so you've deferred your capital gain tax while you're making money. But even more exciting than that are the opportunity zone funds. So the opportunity zone lets you do the same thing, but it lets you take capital gains from anything, whether it's the sale of your business or gold or whatever, but any capital gains, but you have to leave it in for 10 years. And
tax free.
And well, you have to do a tax payment in 2026. Most of the sponsors are giving special distributions to allow for the investors to cover that tax. But yes, if you keep your money in there for 10 years, all the growth is tax free. So that's a really fun one. And
so the 2026 tax payment, that's for the capital gains that you already deferred.
That's right.
The 10-year is all the gains that happened during the opportunity zone investment.
That's right.
So it's kind of two different tax payments. No matter what, you got a great deferral for many years, and then you get tax-free growth after a decade. Like, how phenomenal is that?
Yeah. There are also conservation easements for, investors that have significant income, which we don't really get involved in those. But that's another a fantastic opportunity for investors to.
We've helped with a few of those. We've also seen quite a few carbon credit deals over the past year or so. Have you seen those be handled or sold or anything through the broker-dealer networks?
I have not.
Okay. It is so specialized, but the reason why we are seeing more and more of it is we have a lot of the conservation, the way that they can do forest saving to create the carbon credits. And then there's markets in Europe the industry is required to purchase these carbon credits. So it's there's a sales market. Now we need the investment in the United States to create these carbon credits. And at the end of the day, it's all saving Mother Earth. So, I'm seeing a lot of people, especially right now, it's the tech markets are getting a little softer, and there's such an emphasis on sustainable living, sustainable growth. We've got numerous clients that are focused on, living in a box, for lack of a better way, but of having sustainable living. So I really am enjoying kind of where I'm seeing the investment markets going.
Another hot thing that is going on right now are the single-family build-for-rent communities.
That has been huge.
Yes.
We've represented a lot of neighborhood builds over the years, and I got to say the build to sell is, especially we're in North Texas, around here it's dead to sell, but there's still development happening everywhere, but everybody's just trying to lease it out.
I don't think it's necessarily the best thing for the future of personal home ownership. But one of the key points that those sponsors make is that it's bridging a gap because those people can't get into the homes anyway because the barriers to entry are too high. And it's kind of like apartment living, but you get the benefit of a single family detached house.
So, and to kind of bounce off that, I mean, I've got massive concerns for like the American people when it comes to the affordability of, housing and being able to buy a place and how can you afford to have kids? In my perspective, the easy way to do, not the easy way to do it, the best way to do it is through entrepreneurship and doing your own thing. And, unless you're Taha over here that gets paid by us way too well to buy Corvettes to Turo them out, it often does come down to starting a business, creating an investment pool, getting involved with real estate. And it almost always requires you to have capital. So everything that we're talking about here and everything that we've talked about the entire day is really important for people to get their newfangled American dream. I just don't see the American dream the same way it was in the boomer generation.
Well, I agree with you that entrepreneurship is definitely the key. And I've heard it said that the North Dallas area is like one of the hottest concentrations of the gig economy. But I think of it like before the industrial era, when people were on assembly lines, everybody was doing some hustle of their own, whether they were a seamstress or a shoemaker or, farming or something. Everybody had their vocation, the way that they showed up in the world and provide value. So I don't think it's a terrible thing to kind of get back to that. So the gig economy thing.
I agree with you. There's like a negative connotation to gig economy. I would refer to it as a revitalization of the entrepreneurial spirit.
I love it. Even better. You should be in marketing.